Hello. Hi, and welcome to another edition of What's Moving the Markets by Phillip Konchar for FxPro. Just wait for a few more minutes for people to log on, and then we will start the broadcast properly. Just bear with me a second. I'll go into the chat section as well. So that we can all talk. Excellent. Just get the chat out. Hi all. Let me just get questions out as well to see. Hi Rob, welcome back. Anybody else who is watching and listening today as well? Okay. Okay. Now we'll start. Okay. Brilliant. Thank you guys. Thanks for joining us. Okay, so let's start the broadcast properly. And if you have any questions, feel free, ask as we go along. Let's keep this broadcast fairly informal and beneficial for all of us. And the only way for that to happen is if you guys ask questions and comment in some way. So if I start talking about something and you are finding it confusing, or you have any questions, or you want something else covered in particular, I'll be very keen to accommodate your requests and try and explain what I meant, or cover what's required there as well. Okay, so welcome to FxPro webinar, What's Moving the Markets. We are doing this webinars on a weekly basis. My name is Phillip Konchar. I'll be your presenter for today. If you need to get hold of me, my contact details are on the screen. It's philip@tradercast.com. Alternatively, you're more than welcome to contact your account manager at FxPro, and they will put you in contact with me. Okay, so let's go and start this with a big disclaimer. If you've seen any of these webinars earlier, you're probably aware that they all start with a big disclaimer, and FxPro are execution only brokerage. They're not advisory brokerage, so therefore anything that we discuss here should not be considered to be advice for your trading or investment. Also, this is me, so anything that I say here are just my opinions and advices. Opinions and experiences, not advice, as it says here. Anything that I'm talking about here is normally available in a public domain anyway, and if I do get excited and start talking about certain prevailing trends, maybe important levels of support and resistance, yeah, I'll try and make it simple. I can say for lots of people for the first time, looking forward to, I'm interested in how you traded the big drop in Dow, DAX, etc. on Monday and Tuesday. If you did, Patrick is saying, yes, I traded S&P. But not Dow or DAX. Hi, I'm James. Is this good for the beginners? Okay, I'll try and keep it a fairly vanilla flavored, but just ask. If I'm saying something and it's not familiar, just ask. Okay. So if I do get excited about certain levels or something, then I'm not giving you the advice. I'm not taking in consideration your personal circumstances. I'm just talking to you about what's happening in the market right now. And I'll be definitely covering the economic calendar and some financial data that might be of interest to you as well. As you are talking about beginners, this is quite important. Golden rules for new traders, and I'll read this fairly quickly. And if you have any questions on these, just ask. The rule number 1, never add to a losing trade. Rule number 2, never lose more than 1% of your trading capital on any one trade. Never trade anything that you don't really understand 100% of the time. And this is the quite important one. Loads of people jump and they place trades on something that's kind of topical or something that they hear in the news or social media, rather really understanding what's fundamentally moving that particular market or a financial instrument, and why the volatility might be increasing and so on. So that's the important bit. Trade in the direction of the trend in your trading time frame. So select the time frame that you want to trade in, identify the trend, and trade in the direction of that time frame and the trend, rather than going counter trend. It's increasing the probability of you potentially being right. Only look for a low risk, high reward trades. High probability setups. Don't trade if you don't have any signals. Trade your plan, your system, your signals, the chart, and price action, and not your opinions, bias, and predictions. Find a trading methodology that fits your personality. Don't trade before you have a complete trading plan, including rules on entries, exits, and risk management. The size of your wins and losses determines your trading success. Your risk management rules will determine the success of your technical trading system. And this is quite important to understand as well. The biggest frustration for traders or newcomers to a financial market trading is their firm belief that they will get a predictable and quite definite outcome out of the trading setup or a system that they've used, and even if it's in their favor. And we all know that that's not the case. Markets are random because the people who are engaging with the markets now, 30 seconds ago, 3 minutes ago, 3 days ago, or 3 weeks ago, a different bunch of people. So therefore, the outcome of our joint interaction with this particular market at this point in time could give us a random outcome, i.e. the opposite reaction to exactly the same setup, exactly the same confirmation, and so on. And if I can kind of relate this to a flipping the coin game, we know we are playing 50-50 game if you're flipping the coin, and the logic will say you get 5 heads and 5 tails. And you know, when you're flipping the coin, you don't get 5 heads and 5 tails. So the random sequence of winning and losing trades is very important to accept. Can you all hear? Sorry, can you all hear? Just checking. Yeah, okay. Yeah, check your speakers or volume. Okay, thank you guys. Thanks for confirming. Okay, so that's the idea. So make sure that you are risking very little and look for a disproportionate amount of reward for a potential definite amount of risk that you are willing to take. Now, the last thing that I want to talk to you about is if you need to contact FxPro, feel free. These are the contact numbers, either in UK or in Cyprus. I'm not really sure where you're based. You could be all over the place. But these are the numbers, and feel free and get in touch with them. Okay, now, you should see the MT4 charts in front of you, and as such, okay, let me just remove this quickly. I might bring it back. So A very quick summary for the markets. Markets in general, equity indices like S&P, Dow Jones, DAX, and FTSE are all bouncing off the lows after that big sell-off that we've seen. Gold is under pressure. We're seeing dollar index rallying higher, potentially being capped by this spot 90, but I'll talk about it a little bit more. Crude oil is under pressure as well. Below that psychologically important $63 per barrel level. From the currencies point of view here, we have euro dollar moving lower, cable moving lower, all reflecting that potential US dollar strength. Japanese yen is coming up to a very nice setup at the moment. We'll talk about it again. We are back above that psychologically important 109 level, potentially capped by 109.90, 110. Dollar cards, it's one of the currency pairs that could be impacted later on today, and I'll talk about it right now, going through the economic calendar and what to expect. Aussie dollar under pressure here. We received Australian rate decision early on this week, and euro sterling is pulling back in shorter term time frame, but overall it's quite bullish comparing to where it was last week. We are back above spot 88 level. We are capped by 89. The major support to downside 88, 87, 57, and then 87. But I'll talk about it a little bit more. And there is something that's coming up in the next couple of days that yeah, good. Hamed, great. Something coming up in the economic calendar that would be moving these markets this week as well. Okay, so a couple of things, guys. I don't know how many of you are actually using this website. It's FxPro blog. There's plenty of things posted here on daily basis. Quite a lot of analysis, macro stories in the morning with what's coming up and what's moving the markets, how market open, and so on. And also there is plenty of a good technical analysis reports for various financial instruments that are quite topical at the moment as well. So if you're not using this website, it's free. It's part of the FxPro. Feel free, visit it and see if it's beneficial for you in some way. The other thing that I would strongly suggest as a first starting point is the economic calendar. So before I start talking about levels and drawing some charts and doing that kind of stuff, guys, feel free. I really want you to consider this to be very informal. So if you have any questions or comments, just ask, because then if you're thinking about it, there is probably somebody else who's thinking about it as well. They're just not asking, and they're fairly quiet. So guys, come in and say hi and ask questions. That'll be really helpful for all of us. What I'll do is I'll go into the economic calendar, but I don't want to cover what happened earlier. I want to cover what's going on at the moment and then relate that to what we are going to be talking about from the particular market's point of view. So today is Wednesday, news flash. So we have a couple of important things to watch for today. So the first one is crude oil inventories, guys. That's coming up at 3:30 in the afternoon. This is the inventories data that's telling us how much oil is in the storage in US. This is quite relevant for WTI crude or US traded crude. The forecast is that we will receive 3.1 million barrels built, i.e. More oil in storage in the past 7 days. Last week, we got 6.7 million barrels in storage, although the anticipation or forecast was just for 1 million. And when you see this oversupply, that's normally indicative for supply and demand in oil. So the more oil that's coming up to storage, a less demand, more oil, more increase in the production, it's normally indicative of softer prices. The opposite is also true. If we see a big drawdown, i.e. a huge amount of oil being used up in the last 7 days, much more than anticipated, that'll put the floor under the oil price and make it firmer. So that's the one to watch. That's crude oil 3:30 today. The other thing that's coming up today is if you are trading a New Zealand dollar currency crosses, anything New Zealand dollar, from 8 o'clock tonight until about 9 o'clock tonight UK time, i.e. GMT, we are getting RBNZ rate statement, and then we are getting interest rate decision as well. So Reserve Bank of New Zealand will be publishing the potential changes to the current rate, which is at 1.75% at the moment, and consensus, i.e. the forecast, is that they will leave it unchanged today. So if they come in and their statement appears to be a little bit more hawkish, that'll firm up New Zealand dollar currency. If they do anything to the rate rather than leaving it unchanged, the volatility is likely going to be increased around this time. So 8 o'clock, 9 o'clock tonight. So watch out for New Zealand dollar currency crosses. There is a couple of Fed speeches and then some of the Bank of Japan data, but that's not the major thing. And I'll definitely talk about dollar Japanese yen. Thursday is going to be a really busy day. Really busy day. So on Thursday, overnight we are getting Chinese imports, trade balance, exports, that kind of stuff. And obviously this is closely watched data, not just for the people who are trading Chinese equities or Chinese currency. China is a big influencer in a global kind of markets as well, because of the economy and so on and so on. So these figures could potentially impact a volatility in Asian markets trading, and also Australian dollar currency crosses as well. So keep an eye on that. That's at 2 o'clock this morning, overnight on Thursday as well. The next big thing that's going to come in economic calendar, we are getting a Bank of England rate decision and monetary policy. So Mark Carney and MPC are basically talking about, will they hike rates? Will they leave them unchanged at 0.5? And they will give us the indication of the monetary policy summary going forward. Will they be likely looking to hike rates at any point in future, and the reasons why. And this particular number of data points, it's called Super Thursday. It's coming up from midday, 12 o'clock lunchtime, just before lunchtime UK, and these figures and data are very likely going to impact a volatility in UK equities, i.e. FTSEs, FTSE 100, FTSE 250 and so on, but also sterling currency crosses. So sterling dollar, sterling euro, sterling Japanese yen, anything sterling, it's likely going to experience increased volatility as a result of this data that's coming up on Thursday. Friday, just to finish this all off, we have RBA monetary policy statement, Reserve Bank of Australia, and then towards the midday we are getting Canadian unemployment rate, so 1:30 UK time. Obviously last week we got non-farm payroll, which is the US unemployment data. This week we are getting Canadian. So if you're trading CAD crosses, Canadian dollar crosses, that's the one to watch, and it should be closely monitored on. Sorry guys, I just had a big sneeze. Hopefully I've managed to switch my microphone off before I did that. Okay, so enough with the economic data, and what I'll do is I'll minimize this for now, and where can we catch these news? Carlos is saying. Carlos, you can find them in the economic calendar. Okay, these news go to the FxPro, your broker, and you can go into the economic calendar here, and it's a free and readily available resource, and it's scheduled with the time and what's coming up. what is the forecast, what is the actual thing that comes in, and that's where it comes in. So it's FxPro economic calendar, but there are various different economic calendars available anywhere. Also, this will be covered on financial media like Bloomberg, Reuters, CNBC as well. So they are covering these news as they come in. Okay, so let me just check that. Just checking that you saw it. Carlos, good question. Good question. Guys, any more questions? Any more questions before I go into the markets? Any more questions? So a couple of things. You can go and watch, you can read the blog, this blog that I was telling you about. This is quite useful. So FxPro blog, all of that data that we were talking about, it's covered on daily basis. So you would click on this analysis and it will tell you what's coming up today, and it will tell you what figures came in overnight, and it will tell you how market opened, and it will tell you what's coming up for the rest of the day that you should be watching as well. So you have a couple of things to watch. Carlos is saying, is 15-minute chart the best to trade? It depends. It depends on your trading style. It depends on your work to life balance. It depends what you trade as well, and so on. So if you're trading, if you're working full time, 9 to 5, and you cannot watch the screen, why would you trade in 15 minutes? Because you cannot manage your trades. You're trading in end of day time frame. If you are fairly active and speculative trader, you're trading in intraday timeframes, which could be 4 hourly, hourly, and 15 minutes. But you need to decide which one of these is most suitable to your personality and also to the financial market that you trade and your trading style. You could be trend follower, you could trade the news, you could trade the trend, you can have momentum, you can be a swing trader, you can do all sorts of different things. And these things all, these types of trading styles might have a different time frame that's suitable for them as well. But anyway, okay, so let's start with a couple of things first, and then we can cover everything else. Okay, so I'm going to start with the dollar index, guys. This is the important bit for everything. Dollar index, if you haven't seen this before, is a financial market. It's traded in futures and it follows the movement of US dollar against the basket of 6 other currencies. It's trading against euro, sterling, Swiss, Japanese yen, Canadian dollar, and Norwegian krona, and it trades and it trades for all of those because they're all correlated. So Europe, there's a huge velocity of the money out there. Sterling, it used to be a former well-deserved currency. Swiss, because they're neutral. Japanese yen, obviously dollar yen is the second most liquid currency pair, traded currency pair. Canadian dollar, their North American neighbors, and they're also commodity currency impacted by commodity movements in particular, and Norwegian krona because it's a rock solid. They're sitting on oil and gold. So when this particular financial instrument moves, it tends to have a direct correlation in all of these other currency pairs. So if this goes up higher, then euro dollar and sterling dollar tend to be softer. If this goes higher, then dollar yen, dollar Swiss, dollar CAD tend to go higher. It's that correlation. If this keeps falling, euro dollar keeps going higher. If this falling, sterling dollar keeps going higher. They tend to do that, and dollar yen keeps falling. So you just must understand that this is dollar against the basket of other currencies, but it's a hugely important instrument to follow because it's not just relevant for the for the currencies, but it's also relevant for the commodities as well, because majority of them are traded in US dollar as well. And I want to start with this and then work my way through sterling dollar, euro dollar, and gold, and then go into the indices as well, because at 1:30 we have beginning of the futures trading in US, and I'll cover S&P Dow and so on. So we have this, which is a fairly clearly defined downtrend at the moment in a weekly time frame, and in daily time frame price action is creating a sequence of lower highs and lower lows, and it's also creating a price action which is below falling 20, 50, and 200 period moving average, and it's capped by this falling negative resistance trend line. Now, we are coming to some significant levels of support from a longer term time frames. This is the monthly time frame. I know you cannot trade in a monthly time frame, but what is it called? It's called dollar index. Okay, or on FxPro. I'm just posting it for you. So this is the important, because the monthly time frame is pointing to these previous highs, and the falling price action is coming. So rising support trend line here. We are coming to some levels of support here, guys. And we all know that Federal Reserve appears to be quite hawkish. So we have 50% fib retracement from this low to this high. And if I'm going too fast now, and if I'm confusing some of you, let me know, please. I'll slow down. Now, we have daily time frame, which is bouncing off monthly and weekly supports, but we are still capped by this negative trend line and this resistance here. So the big level for us to watch for dollar index, I use FxPro Edge. How to access this chart? Just search for dollar index. Okay. Okay. So we have important resistance at 90, guys. I'm going to carry on through this. And if we see a confirmed breakout above that psychologically important level, 90, so we could see a breakout, a retest from above to found to the same level, which is a newly found support then, and then potentially that would open up the way for the retest of this higher resistance areas towards 90.66, followed by 91, and then we are meeting this falling resistance trend line. We are also at that time meeting a fib retracement level of 38.2% as well, so around that 91. So it's a very, very important level. We are also meeting a falling 50 period moving average as well. So a number of people will be closely watching for this type of reaction. What bears are hoping for? Bears are hoping for something like this. They are waiting for either a continuous rally into that zone here, and then a sell-off, rejection at 90, and a move lower. And the reason for that would be that that previous cluster of the lows here is also meeting this falling resistance trend line here. And then it's also meeting this blue line here, which is, if you remember, this previous support, previous support, previous support. Now we are testing it from underneath. It's a resistance. So it's very, very important level, hugely, hugely important level, watched by many, many, many traders. And what happens at this point will determine quite likely what happens with euro dollar, with sterling dollar, with dollar yen, with dollar CAD, with Aussie dollar, with dollar Swiss, with loads of different things, including gold and oil. So keep an eye on it. It's a hugely important level to watch, and any kind of statements by Fed Reserve or anything coming from states would likely impact this particular financial instrument. If you remember, last week we had a statement in Davos that certain members of Trump's administration would prefer to see weaker dollar, and then this is what happened. So it was reacting to what was said and very, very quickly. So now if I can translate this to what's going on with dollar yen, and we have dollar yen, guys, and yet again I'm going to go into a longer term time frame, weekly time frame. There is no trend here. The price action is mixed with the 20, 50 and 200 period moving average. It's below it, but it's going sideways. It's ranging here. So dollar yen is not trending at the moment. Daily appears to be under pressure here, capped by 109.90, 110. So if we see that dollar index break out higher and sustain itself above 90, it would be likely that dollar yen might attempt to challenge this resistance area here, and then if broken, that would open up the way for the retest of this further upsides towards 111, 111.67 area. The other alternative is if that dollar index, if you remember, rallies into 90 and starts selling off from there, that would put additional pressure into dollar yen, and then something like this could happen, guys. We have a cluster of the previous significant lows down here at 108. Okay, let me just be a little bit more specific. 109, 108.60, 107.80. So if we see a flush lower and then a retest of those lows from underneath, and additional selling pressure forming, that would be seen as a bearish development for dollar yen, and then dollar index would be rejecting here and falling back lower. So keep an eye on that. Keep an eye on that dollar yen. Currently initial support at 109. Bearish below that level, potentially targeting 108.60, support level followed by 107.80, maybe even 107.20 down here. These lows here, 107.27, 107.30 would come in play as a logical downside support. The other alternative is if this 109 holds and we see a breakout, then this bearishness is negated. The initial upside is capped by 109.90, 110. Breakouts above 110 would quite likely target further additional upside resistances towards 111, followed by 111.67. Now, in a 4-hourly time frame for dollar yen, guys, you can see this shoulder, double top shoulder, head and shoulder with the neckline here. You're seeing a continuous selling pressure here, and you're seeing this as a breakout and potential move higher, but it needs to follow through. It does need to follow through in order for that breakout to be qualified as a breakout. Otherwise, if we dip below, it'll be negated, and it won't be valid. It won't be valid as a breakout as such. There is no specific data coming in from Japan today in order to drive this market forward. Now, the other thing is that I should be talking to you about is cable, because as I said, from the economic calendar point of view, guys, we have Super Thursday. We have on Thursday midday tomorrow, Bank of England is talking about the rate decision, and what they say and do might impact a volatility in sterling dollar. Now, this is sterling dollar in weekly time frame. We are capped by this 200 period moving average and a cluster of these previous lows. This shape here, if it finishes in a weekly time frame and this candle stays where it is or lower, is known as a star reversal pattern. There is one here. There is plenty of them around. If you want to know more about what it is, go and find out about candlestick reading. The pattern needs to form in order to be valid. From the daily point of view, the cable is still uptrending. It's still uptrending because we have a number of rising trend lines supporting the current price action. So if Bank of England comes in and appears to be hawkish or potentially even increase rates, and expectations are that they will keep the rates unchanged on Thursday, that will be seen as bullish for sterling, and then we could see a breakout and a move higher. If they do nothing or appear to be dovish and say, we are concerned with the Brexit, we are concerned with the current market sell-off, we are concerned with all sorts of other stuff, and we might even be looking to lower the rates, which is not what market is expecting, then that will be seen as a bearish for sterling, and sterling could possibly fall even more. The same thing with dollar index. If dollar index breaks out and rallies, it's likely to assume that sterling dollar might pull back as well. So keep an eye on it. It's all very much interlinked. So from the 4-hourly point of view, we're seeing this as a logical downside support here, where these previous lows, high, lows, lows. So that's the initial support to the downside, followed by the cluster of these highs and also these lows. So there's a supply and demand zone here as well. So from the 4-hourly point of view, price action appears to be under pressure. You have moving averages which are crossing over, and people who trade moving averages, crossovers, bearish cross, bullish cross, and so on, are keeping an eye on this. We are seeing a little bit of a selling pressure here, and the initial upside is capped by this 139.40, 139.80, 140. So around here, this shaded area is really, really important resistance on the upside. If I go down to an hourly time frame and show you how this looks, if the price stays below this area here, so we see another rally here and a sell-off, that will confirm that resistance is at 139.43, 139.80, 140, because it's a nice and round number. Only a breakout, sustained and confirmed breakout above that level would open up the way for the retest of further upsides towards 140.70, maybe even 141 to the upside. The other alternative is if we see a rally and then a rejection from there, it's bearish, or if we see a loss of these current lows, something like this developing, and then a retest of these previous lows as a support, now newly found resistance, that would open up the way for the retest of further downside, testing 138.55, 138.10, 137.60, which is our 200 period moving average, and also the cluster of these lows. So there's a supply and demand zone here. There's a huge amount of orders here, which were traded in the past. If the price goes there, it might be challenged again. Only a confirmed loss of 137.60 support level would potentially open up the way for the retest of this shaded area here towards 136.60, 137, because then that's that daily rising support trend line, and it's also that daily 50 period moving average area as well. Very good question, Hamid. The price action is basically showing it to you. It's ranging. You always wait for the pullback or a breakout, Patrick. Not always, Patrick. Very good question as well. Carlos, I don't know how to use Fib. I would love to show you how to use Fib. Guys, you're more than welcome to come and join us in TraderCast as well. You have free access to TraderCast if you have a live FxPro account. Speak to your account manager and say, can I access TraderCast? Or just go to TraderCast and register, put FxPro as your introducer, and I'll activate your account. And then you'll learn how to trade, how to use Fibs and everything else. You're more than welcome to. If you don't have account, you're more than welcome. You can try it. It's it's membership based community for traders as well. But I'm not here to talk to you about TraderCast. You are more than welcome to come and check it out for yourself. Speak to your account manager. So that's cable. That's cable, guys. So keep an eye on these levels. It's very likely that sterling dollar volatility will increase on Thursday around 12 o'clock when we get a Bank of England rate decision and the press conference as well. Okay, so keep an eye on that. Now, let me just go and talk to you about a euro dollar quickly, and then euro sterling, and then I do want to talk to you about these indices because they're really developing quite nicely. They're really developing quite nicely. I'm covering the products and the markets that are kind of quite popular and frequently traded. So euro dollar is the most frequently traded currency pair, followed by dollar yen, and the third one is sterling dollar, and so on. Okay, guys, well, my charts for euro dollar are a little bit more busier, as you can see, and I know I'm trying to keep my charts very plain, without any indicators, without any annotations and so on, but I have few things going on in this. I don't want to confuse novice traders who are watching this broadcast. And I'll try and explain what everything is, but I have different things on this chart which are pointing to me to what might be of interest. Euro dollar uptrending very nicely, and we are seeing this significant sell-off yet again, triggered by move in a dollar index. Now, what we should be watching here is, in a daily time frame, the price action is creating the sequence of higher highs and higher lows. We are correcting at the moment, and we are coming to a 20-period moving average in daily. We are also coming to S1, support 1 from the daily pivots range, and we are also coming down to a cluster of these previous significant lows. If the price stays where it is, it would be retesting this, what appears to be forming a particular topping reversal pattern, which looks like a double top. The only way for us to know that this is a double top is if the price aggressively flushes lower and tests the previous support, which is this neckline here of this double top at 123.40 from underneath, something like that. That's the previous highs, and then the price action might flush lower down here. So you have S2, S3, support 2, support 3, you have 200-period moving average, and you also have that rising trend line in a prevailing time frame. So your daily time frame is showing you that this is a rising trend line. What's interesting from a market symmetry point of view is that people who are looking for this type of trade to happen is they are looking to take the distance of the head to the neckline, whatever that is, either by closing levels or by the wick, and then they're looking to extend it at the bottom where the breakout happens, and that gives you a symmetrical move, i.e. the same number of points from here to here. And majority of the bearish traders who are hoping for this confirmation to happen would likely be looking to take profit at any of these levels. So these levels, just to repeat it again, these levels are 123.15 followed by 122.80 followed by 122.54 followed by 121.94. Call it 122, nice and round number. So majority of the traders would be looking to put their stop losses up here if they're sitting in a bearish camp, okay? So that'll be the bearish scenario and a reversal. Now, there is always the alternative. Alternative would be if the price stays where it is and doesn't lose this shaded area support, and instead we see a breakout higher, and this breakout must happen above this orange line here which is the pivot line at 123.74. So the initial upside resistance for euro dollar is currently at 123.75. If the price does spike higher and break above that level and confirms that breakout by staying above in 4-hourly or end of day time frame, let's say end of day time frame, then that would indicate that bulls are in control and that this topping head and shoulder pattern or topping double top pattern is no longer valid, and we could quite likely see a move higher to test these additional upside resistances towards 124, followed by 124.30, followed by 124.80, followed by 125. So you have two alternative plays here. So far, this does appear to be in the process of potentially forming a topping double top pattern, but it needs to be confirmed in your time frame, according to your confirmation, according to your technical trading strategy that you use, that you hopefully tested over a long period of time in a demo account that gave you a predictable outcomes with probabilities in your favor. That's what I'm trying to say, okay? But it does appear to be under pressure, capped by this negative trend line and moving lower. And I would definitely keep an eye on that dollar index as well for any clues. Okay, guys, so the other thing that I want to talk to you about from the currencies point of view very quickly, we have euro sterling. This will move as well very, very quickly on Thursday. Euro sterling is ranging at the moment. This is a daily time frame, and it appears to be capped by this 189 level up here. Capping the price. Only a confirmed breakout above that level would indicate further upside resistances towards 189.60, even 190 to the upside. So euro sterling, this will quite likely, volatility in this particular market will quite likely move on Thursday. The other alternative is below spot 88, which is the psychological level, nice and round number. If the price gets rejected here, as you can see, for some reason, you can see selling pressure forming here, and we see a quick return below spot 88. That would open up the way for the retest of this additional downside support towards 187.57, 187.40, spot 87.57, spot 87.40, spot 87 even, spot 87 even, and only a daily close below this current sequence of the lows at spot 87 would appear to support bearish scenario, potentially opening up a further selling pressure towards 86, 86.50, 85s, 84s, and so on and so on. But that would mean sterling strength as well. So a bearish intraday below spot 88, potentially targeting supports at 87.50, 87.40, 86.50. Alternatively, a confirmed breakout and a daily close above spot 89 would negate bearishness, targeting further upside towards spot 89.60, followed by spot 81. Sorry, spot 90. Oh man, I think I'm trying to cover too many things. Okay, so that's euro sterling. So I had a question here. Patrick is saying the same. Patrick, you're more than welcome to. Thank you, Patrick. Thank you, Patrick. Thank you, Patrick. Guys, it'll be lovely to meet you in person and get you on board in TraderCast as well. So you have free access if you have a FxPro live account. So just go to the go to your account manager and ask for TraderCast access, or go to TraderCast, register, put FxPro in your introducing field, and then when you come to the payment stage, do not proceed. I will activate your account. If you don't have a live account with FxPro, speak to your account manager and see if they can point you to the right direction. You're more than welcome to come and join us. Okay. Now, the other thing, gold, guys, gold very quickly, and then we could talk about a couple of indices. So we have gold in a daily time frame. Yet again, gold is linked with dollar index. Why? Because gold is traded in dollars. So stronger dollar quite likely indicates a selling pressure in gold. It was a strange reaction in gold lately. Normally when you see a significant sell-off in equity indices like Dow Jones, like S&P, like what we've seen over the past couple of days, last week and a couple of days of this week, that normally means that gold would rally. It's a safety mechanism. It's a initial reaction to the volatility increasing and the risk. But this time we didn't see that. So I'm scratching my head here. So gold did not really react in a bullish way proportionally to the sell-off that we saw in equity indices. So what we are seeing here at the moment in gold time frame is we are seeing gold potentially pulling back and getting softer. So this is the daily time frame for gold. This is the 4-hourly time frame for gold. And if you were looking at this potentially worth paying attention, this could develop into something a little bit more substantial here. Okay, we have initial resistances. There's a shoulder, head and shoulder with the neckline here. You can either have a neckline here or here. It doesn't matter. Pick to two, either way. If we see a loss of that support and the retest, which is happening right here, the initial upside resistances are capped by 1332, 1336, 1340. Above that, we have 1345 and so on. Downside is supported by these kind of lows down here below 200 period moving average. So I would be watching these lows. I would be watching these lows as well, and I would be watching this 200 period moving average and this intraday low as well, 1320, 1316, 1310, and then below that obviously you have 1300. Why? Because it's a nice and round number. It's easy to remember, and majority of the traders were keeping an eye on this 1300 and saying gold above 1300 is bullish, below 1300 is bearish, and so on. So keep an eye on these levels here to the downside. Yet again, from the market symmetry point of view, if you take top of the head to the neckline, add it down, that brings you down to the 1300. The alternative view would be something like this. So we have this sequence of the lower highs, and if for whichever reason this area here holds, and this support firms up, and we see a breakout from this level and a breakout above this falling resistance trend line, which is capped by 50 period moving average, which is also capped by this trend line, which is also quite important from the Fib point of view of 38.2 and 50% Fib retracement. Guys, if I'm talking too fast and if I'm covering too much that you don't understand, just ask, please. Breakout, retest, then that would negate this topping head and shoulder pattern, and then all of this will then become a bullish breakout, potentially targeting 1360, 1370, 1380, 1390 and higher. So very, very interesting levels for gold. Normally when you see a big sell-off in equity indices, gold tends to rally, and that didn't happen this time around. So from the intraday point of view, keep an eye on initial resistance in gold at 1332, followed by 1336, 1340. What does the triangle that is forming mean, Chantel? Triangle that's forming, it's called continuation pattern. So head and shoulders, double top, triple top, they're reversals, and triangles, pennants, flags are continuations. So guys, I can see there's a mixture of people here. Some are fairly new, some are experienced. So I'm trying to cater for everybody. Let's see how that goes. The last thing that I want to talk about is S&P and Dow Jones, I suppose. So let's do S&P very quickly. S&P from the daily time frame, we saw this massive sell-off, and we are seeing a reversal now of since yesterday and today as well. From the intraday point of view, this is still uptrending in longer term time frame. So weekly is uptrending, daily is questionable. There's your 200 period moving average here. So anything above 200 period moving average in any time frame is uptrending according to the technicals. But we saw a fairly substantial sell-off here as well. From the intraday point of view, all of this here is quite intriguing, because this can form an oversold bounce back for another leg lower, or we can see a breakout and a move higher. So the levels that everybody's keeping an eye on for today's trading range is, this is the first one. See this level here? This is where we closed yesterday. So what I'm going to do is I'm going to go and put this here. 26.90. That's absolutely massive level from the intraday point of view, as a line in the sand. That's US traders, when they come to the market, they'll be watching this level like a hawk, absolutely like a hawk, because that's where we closed yesterday, and we are testing that level from underneath at the moment. So if the price stays where it is and starts selling off from that level when the US markets open at 2:30 today, then all of this will become a rising wedge formation in overall prevailing downtrend, which also corresponds to a fib retracement of 38.2. So multiple reasons why this is a hugely important level, and I'm trying to remove some of the stuff here because I don't want to confuse anybody. But keep an eye on that level. That level, 2,700, 2700, 2690. This area here is absolutely hugely important for S&P. If the price starts falling from that level, it will indicate that bears are still in control and the recent volatility is not completely finished, and we could possibly see a spike lower to test these current lows at 2654 and potentially move even lower to test 2630, 2615, followed by 2585 down here. Maybe even here, 2536, maybe even here, 2483. We don't know for sure. We don't know when this sell-off might stop. The alternative is, if the price breaks during today's trading range and stays above this range, which is 2690.27 on S&P, and we see a breakout, then it would quite likely trigger some stop orders. There's huge amount of people who are still shorting and they have their stop losses up here because this is the level, breakout level. So if we see a breakout level challenged and those stop losses get picked up, it will create a short squeeze and the price will spike higher very fast on falling volume. And it might not necessarily mean that new buyers are coming in and pushing the price higher. It could be the fact that people who were shorting the market, or they came in too late to short, or have their stop losses at that level, are being stopped out of their short trade. Therefore, they need to buy in order to cover their short, and that pushes the price higher. So be very, very aware. Be very, very aware of that range, 26.90, 27 on S&P. Breakouts above that level could possibly open up the way for the retest of further upside towards 27.35, 27.63, 27.82 on the upside. So bearish below, bullish above. This is the level. Okay, guys, it was lovely, lovely, lovely talking to you all. How do you know its resistance level? Guys, I would love to talk to you more often, but if you can join TraderCast, you are more than welcome to come and join us. We have daily broadcasts from 9:30 until 11, and then from 1:30 until 3:30 every single day. As a community of traders, we are posting our analysis in the community, and we would love to welcome you into our community as well. If you have a live trading account with FxPro, you can come and join us. Just go and register. Just go and register on TraderCast and come and join us. Alternatively, just go and speak to your account manager at FxPro, and they'll point you to the right direction. I'm going to finish this. Sorry. I'm going to finish this webinar with a nice disclaimer again. These are just opinions, and so no answer here. What do you mean? Where do you register for TraderCast? Okay, well, just feel free. Go to TraderCast and register, and put FxPro in the introducer field. Go and speak to your account manager and ask him if you can access TraderCast. They'll tell you yes, and if they do, we would love to welcome you as well. Thank you all very much for watching and listening. Stay safe and happy trading. Happy trading. Okay. Happy trading.